Hello.
Hello. People, I met some people in Denver who said something about my voice, and I'm very conscious of how I sound. They said I should record erotic novels, but that was my
Actually, I
past.
think the same for you. Yeah.
Why would that make you so conscious?
I don't know. I don't want people to get a semi while they listen to me.
Sure.
Okay, good. Am I Swiss? No, I'm not Swiss. Um, okay, one more minute. Do you want to pull anyone else up? Let's see. Okay.
We had some.
John, are we good to go with the recording? If so, then we can go. Okay, so welcome everyone. Yeah, today's of course a special day. So just to start, not too much about it, but like the events of the day, of course, go further than our industry, and I hope you and your families are safe, regardless of your political beliefs. Just let's all hope that the situation is resolved as soon as possible and that we can move forward, right? It of course has also effect on our market, but that's not the most important thing in the end. But of course, we're here in a community call about a cryptocurrency project, so we have to talk about it, of course. And yeah, there were a couple of questions, especially today in the chat, about things like how are the inverse bonds going? What is the process there? What is the backing? How will basically Olympus react in this environment? And maybe also just some general updates about other stuff if you have time for that, or your questions if you want to come on stage. As always, we have our community call AMA channel just above this one, where you can ask any questions that you have. We'll try to answer them either in chat or during this stage. And you're always free to free to put your hand up as well to come on the stage as well. Okay, good. So let's get started. Maybe Shadow, question to you. Maybe first I saw on here in the Discord today quite a lot is like what would happen if we go to say a lower price point, like say below 40, below 30s. What do we consider to be the backing value? That's also maybe something that we should clarify. And how does policy look upon interacting? Like is everything a bit set in stone, or to get these inverse bonds going? It's a lot of questions, so maybe first.
No. Yeah, I got it all. Yeah.
Okay, yeah, that's perfect.
So
Go ahead.
actually, there's a difference like between what you can consider like regular backing, like what's in the treasury, and what we consider as like liquid backing for the purpose of inverse bonds. So for the purpose of inverse bonds, what we consider important is the liquid backing that removes all the locked tokens such as CVX and FXS. Sorry. And we also removed the RFE that's earmarked for the treasury, for the own minting, So given that ohm supply is somewhere around 11 million, we would remove that from the calculation as well. That would bring, I think, like I don't want to like speculate the numbers right now. So one thing to keep in mind is that once price goes down, the value in the LP also goes down, right? So the backing will increment a bit down because of that. So it is somewhere around, like, should even say a number like $30, but it will go lower. Right now it's 30, but it will go lower because of the LP. So you can expect like below that. So what will happen is that we will open up. We would open up the inverse bonds at a low capacity, and then after that, like the point of inverse bonds is not like necessarily like to just pump up the price as soon as possible. Like the point of inverse bonds is that it's profitable for the protocol, and by being profitable for the protocol, it's profitable for all the ohm holders as well. So from that perspective, like every inverse bond that gets sold increases the backing of the rest of the holders.
So should we see this as like an option for people that just want to get out, or is this more of an opportunity? Like, who do you think that will be taking this inverse bond? Since basically it's below backing that only, as you said, the treasury will buy back, right?
Yeah, good question. We discussed that recently as well.
Mm-hmm.
I mean, at the end of the day, it will come down to whose fingers are quicker, right? Who will take the deal. But like, I'm sure that like every holder of WOM is fine with Arbors doing it as well, because they would buy from the pool and then they would bond in the treasury, right? And so as a consequence, you would get a higher price and you would get the increased backing because they have done the inverse bond, which I just mentioned, increases the backing of the rest of the holders. So like, I just want to make it clear that just because somebody arbed like the price with the inverse bonds does not mean that the value does not accrue to the rest of the holders as well.
Mm-hmm.
Yeah, I think as a holder like myself, I would like speaking for myself, I would rather not sell backing in the hopes that someone takes that inverse bond opportunity, which would increase backing per token, so it's profitable.
You probably need to like increase your sensitivity or like decrease your sensitivity since you're going in and
Am
out a
I
bit.
am I too loud or am I cutting out? Is that better?
No, that is better. That's better. Yeah, perfect.
Yeah. No, I was saying to the question about like whether it's going to be arbors or holders. I mean, it can be holders, but like just speaking for myself personally, like I would not want to sell at those prices. But it becomes an arb opportunity for someone to come in and, as Shadow said,
Mm-hmm.
Take that arbitrage, and then it's kind of like the invisible hand. It helps the market, right? It helps the protocol and helps holders as well.
No. Okay. Maybe interesting as well. There is what asset will be actually given in exchange for this OM, right? I've seen questions. Do we do it with ETH? Do we do this with or RFV things like Dive, LUSD, Frax? Like what asset would be the counter asset to these inverse bonds?
So we've aligned on doing it with stables first. At the moment, we can speak to the future if there is a need to increase capacity or whatever. But at the moment, we're comfortable doing it with stables.
Okay. Perfect. And maybe also just to highlight here that we have, of course, also assets locked. I know that was said in the beginning, but so we have, for example, Convex, which is bringing in, like, again, quite a lot of assets every 2 weeks in uncertain environments. So that's actually good in my opinion. Also, we have our FXS locked, which gives us quite a lot of power there as well. But like that also means that those aren't like able to be used, of course, right? So that's also maybe something for people to consider at this moment in time.
So to shed some like more light on just that, sorry for the Convex. So like basically Convex is under a lock and it will expire in like I don't know, a few weeks, a week or two, I don't know. And you could technically include it in the backing, right, for this calculation. But the whole point of like acquiring Convex was to gain that governance power and that yield, as you mentioned. And like once the lock expires, we can expect to lock it again or whatever. But like that's the point of CVX. That's why we bought CVX, to get that governance power and stuff. And so like that's why we don't really want to include it. And people need to remember that that's still like the worst case. Like the number that we're using is the worst case. Like that's the liquidation value, so to speak, which is a horrible term. But yeah, inverse bonds are just meant to like uh, bring some more confidence to the market rather than like liquidate the treasury. That's not the goal of inverse bonds.
Yeah, indeed. So I think we saw that also in the industry, right? With like, I think OlympusDAO successfully defended earlier. Some others as well. And I think once we've shown that we, for example, just have this option on the website, even if you're much above that, then people will indeed have that confidence that Olympus will do this. It's not just draining the entire treasury. It's just saying, okay, look, guys, there is this option. We are prepared, and I think that's quite important as well to show the market. In the meantime, if you have any questions, it's very quiet in the community call chat just above this stage. Please post there. Hopefully you all are able to, and we will continue here as well. Quite decent. Okay. So when do we think that we will put this live? Is there like a timeline, Shadow or Abby, where you say like, look, we will put this up maybe in a week? Is it something that you only put up when, for example, we're trading below a certain price point? How does policy look at that? Maybe I
So
put you on the spot here.
yeah, no. So like I said, that number, the liquid backing, but it's at policies like discretion or the DAO's discretion when the universe bonds will be activated around that point. Because like we don't want to anchor people to a price. It will depend on the market and stuff. So we will like talk about that once we're closer to that price, I guess. As for the front end contracts, they're pretty much ready. So I mean, we'll put that up like when price gets nearer to them. Otherwise, like it's not needed at the moment.
Mm-hmm. And some questions coming in the chat now. I'll encourage that as well. So, for example, what steps will be taken to increase that backing again? So we see that we're in quite a challenging market climate. Bonds have, of course, low capacity because our premium is relatively low, right? I think that's a reasoning behind that. But like, what steps do we see in the short to mid term on that backing, or is it now just all hands on board for these inverse bonds and see if that affects the market?
Definitely not. I don't know if Jala wants, if you can talk. Like I don't want to take over the call completely, since Jala leads Olympus core working group in the DAO. Whether he wants to talk about the other work being done, like definitely not. Like inverse bonds are just another policy lever. So like it's just one of the things, but there's a lot more cooking in the DAO.
Yeah, happy to tick through it or talk about any specific projects. Yeah, we have a long list of projects. A lot of it related to the Olympus 12 roadmap that was put out a few weeks ago. And one of the more immediate projects that I saw some people asking about on the chat are some of these tender offers, acquisitions, pursuing some of those. So I saw just a question on that. If you want to touch like on an update that I think there's going to be an updated forum post with some like revised terms based on the feedback. And then from there, after a certain amount of time and final comments, that will go to Snapshot. Probably good to have a few day buffer anyway right now, just given the uncertainty in the market. So I think that process will the timing will work out well there. And then as we discussed on the call, we will pursue based on whether that passes governance or not. A lot of the other projects right now sort of like are involving liquidity. So migrating liquidity to concentrated positions, which I think ties in well to some of the stuff we were just previously discussing about helping to stabilize price and show the treasury's strength. Using liquidity as a service. So some of the incurred debt proposals you've seen by Fiat DAO and Redacted, those are very exciting as it relates to like partnerships, but also like creating cOHMmunity, especially in DAO treasuries. Like there's some of the DAO swaps we're pursuing, UI improvements, cross-chain initiatives. So somewhat relates to liquidity, but it's kind of its own category. And then a big one that we're starting to pursue now is further decentralization and on-chain governance. So a lot of projects going on right now. We're not slowing down because of the market and continuing to build.
So maybe a critical question here, right? So we see in the past bond revenue has been a catalyst for Olympus. That goes together with quite like a high premium, and then we want a lot of bond volume. But is that then that's the thinking behind like getting back that premium and getting back that capacity to indeed increase the capacity again of these bonds. Like how do we get out of this might for like an outsider look like a vicious cycle?
I'll take a crack at that, but interested in others' opinions as well. So I think a lot of it goes back to, so I think of like the premium of Ohm in a few different ways. Like above backing, right? There's kind of like the going concern value of about like the protocol is actually generating revenue and demand like naturally from revenue streams like Olympus Pro or yield farming or some other services, right? And then on top of that, you have natural demand, which helps to increase that premium. So, I feel pretty comfortable that given where we are now, that like we'll be able to hold pretty steady, and that will allow us to push some of these initiatives forward that will create more demand, like some of the liquidity services like IncurDAT or other utility for Ohm and DAO treasuries or for holders. That demand will naturally over time bring back the premium, which helps start that flywheel again. I feel pretty confident that we'll be able to get that started again.
Okay, good. Let's see if anyone wants to come on stage. Logic, I hope you still want to come on stage. If not, this would be weird. In the meantime, I will look at the chat. If you have questions, please go to the chat right above this stage. Yeah, we see also in the market, maybe interesting, redacted. Also, for example, bouncing back strongly. We also have like other partner protocols doing the same, with which you hold a lot. Tokamak, for example, interesting one as well. Why is this question always coming back about Klima? Are we going to buy Klima? Is Klima going to buy us? Yeah, interesting one. Don't think that's the goal here. Okay. Looks like the person coming on stage does not want to come on stage. If you want to come, please put your hands up. Can pull you on whenever you want. If you have any question, please post them in the chat above. If not, I can. What happened to the YouTube channel? Yeah, good question. So YouTube channel, we are actually going to revive that. No panic, we'll do that as well. When FOMO 5? So FOMO 5 is in the offing, as I say in the nice English language. At the 23rd or 22nd, 23rd of March will be 1 year, and it will be close to that, which is quite interesting, I think, for everyone. It's been too long since we had a FOMO. I think you will all agree, right? It's now already been 2 months, so
That's gonna be awesome.
Okay. Yeah, indeed. It used to be every 2 months, but because the 1 year anniversary, we going to delay it with 1 month. Yeah, maybe an update on the Vesta situation. I think that's indeed a good one that I also was asked by the Vesta team to communicate here. So Vesta for a while had the wrong front end display where they showed liquidation ratio for ETH instead of the one for Ohm, where some people by accident, not by accident, but got liquidated while they thought that they weren't going to get liquidated because the front end showed a different number, basically. So if you have been liquidated and that wasn't wasn't what you expected, or you were basically worked to buy the front end, the Vesta team would like you to contact them. Their name, I will post them here in chat, their Discord, and they wanted to you to personally reach out. Let me quickly pull that up here. It's Mickey Milken. Here at Mickey Milken, this guy. Contact him, and he will be able to see what the Vesta team can do. Yeah, so unfortunate situation. We were made aware of that. Thanks to the guy. Where is he again? Where are you? You were in the chat. Yeah, Gorilla Trader. So thank you, Gorilla Trader, for making us aware of that. We quickly contacted the Vesta team, and they also fixed it, but unfortunately some people got liquidated again. Not very very helpful in today's climate, but it can happen, and it was very quickly fixed. What is the
There's a
progress on
good
the new?
question. Yeah,
Yeah,
yeah.
yeah. What is the progress on the new dashboard by the multi-form dudes? You have
We
an
have
update
a
on that, Shadow?
meeting. We have a meeting tomorrow with them to go over what they've made. It's
Mhm.
gonna be pretty soon. They've been doing a really
I,
good job.
yeah, I think they even shared a nice mock-up on Twitter. Let me quickly try to find that. Which was very nice to see. I think that it's even their header now. Let me share it in the chat. It's nice to see like these initiatives, right? So for example, if you see something like this in a market where there is another DAO or like a group of people that make cool stuff that you think, wow, Olympus really benefits from them doing work for us, for Olympus, please let us know. Like it's always better to let the experts do it than try to hire for the DAO and then have a lot of overhead costs to make it work. So this, for example, is quite exciting to see, and I think that's something that has been asked for literal almost a year now. So very happy to see that this is coming to fruition. Okay, Spartacus standard offer update. Very good question, Dom. So maybe Jella or Shadow or whoever wants to, or Abby, whoever wants to do it.
I think we answered it. Was that not what Jala was answering? He said that we're gonna. Did you answer that, Jala? You said you.
Yeah.
Yeah.
Okay.
Yeah, we're posting a revised proposal and then going to snapshot.
Okay. Perfect. So that's good. Maybe then the next topic on that one is like any other fork we're considering to extend this offer to. I saw quite like on Twitter it was a bit of a mixed reaction between like the people that like the Spartacus believers that think that project will reemerge from the dead basically, and then others that saw good intentions honestly. How do we look back on that, and like how do we think about maybe future tender offers?
Well, so it's not just that we want to actively pursue all these tender offers. We also wrote in the framework, right, that we want to like make contact, like anybody from their community can also make a proposal for us to acquire the other protocol, its treasury, and then they could get a tender offer in Geom and become, OMIs. So that's still open as well. Like Spartacus was really like trading was really a parent example, right? We only recently passed a proposal for the tender offers, and Spartacus really stood out there. But like, yeah, we're always happy to talk to other protocols as well.
And maybe to build on it, sorry, Charlie, you can go after me. But like, it isn't exclusively for Ohm forks, right? Because they're basically dying out. Yeah, exactly.
It doesn't have to be, but I think Shadow made a great point that I mean, it doesn't even have to be a member of another community, a member of our community. If they want to put together a proposal and post on the forum, obviously we ask that some thought is put into it, right? That's not spammed, but like that'd be great. Like this, it's definitely not something that needs to be top down from the DAO, and actually like prefer that people propose ideas.
Okay, good. If you have questions, please ask them. Okay, that was this answer.
Why is nobody coming up to the stage?
Yeah, people are shy. People are scared, man. Someone else asked one more Klima question. You're going to have to come on stage. Let's see. Some questions about grants. That's fine. Nothing specific though. Someone saying we should run a competition on who can make the best 10-minute YouTube video for a YouTube channel that explains how this project actually works in a way that any ape can understand. We have a YouTube channel which is where we have actually quite easy to understand explanation, I think. Hope you have seen that. If you think you can do better, indeed, apply for a grant or organize something, or nothing holds you back to even try it yourself and then ask for compensation later if you want. What is the current state with our market maker? Yeah, that's why I was actually typing. So I met them in Denver last week. GSR, very nice people. But on our side, we need to get the legals in order. So they're fully ready. Our legal counsel needs to still provide like some countersigner or something, and some like opinions that we aren't security and that sort of stuff, and then it's fine. But yeah, that's basically the status. But again, it's not that easy as people make it out to be. Unfortunately, I wish it was. When Olympus Pro permissionless? Very good question. Very good question. Stacks here? If you are, please put your hands up.
Yeah,
If
I'm
not,
looking for him as well. I don't think he's here.
no, he isn't.
Maybe Jalan.
I do not.
Yeah, we can come back on that. Good question though.
I heard
Yep.
today that its code is still under development, but I'm not sure on timing.
Okay, fair. In the meantime, we have Stevart. I hope I pronounce it right. Wants to come on stage. Hello, sir.
Hey guys, thanks for having me up. Two questions. One is, I know tender offers are new. Do we have any idea on like how long the process should take, say, given proposals accepted? And then the second question is, I was in the AMA with about the Spartacus tender offer, and there seemed to be a lot of mixed opinions and so on. Do we have any idea on how the Spartacus team will receive the offer, assuming everything goes well in the snapshot and so on? Because it sounds like there has been no communication with the devs or anything, but just curious to get some feedback on that as well.
So in terms of timing, it would like after our snapshot process, we would have the tender open for 7 days, at which point we could execute the transaction based on the numbers at that time, and then there would be some like straggler period for those that like hadn't tendered originally that they can come later. And I know there was some comment or some pushback on like the straggler period, but as it relates to like on their side, don't have a great sense from the community. As Wardle said, I think it's split, though I think there is some strong support. I don't know like what their devs will do, right, if there is a strong show of support. So right now they've been pretty quiet. Hard to know what they'll do, right, like when push comes to shove, right, at the end of the 7-day tender period.
Gotcha. That makes a lot of sense. I appreciate that. And then is Olympus pretty much the only ones like proposing tender offers in general out there, or are there a lot of other projects in the space doing it? I'm just not very familiar, so it's a new thing to me in crypto.
So there have been a couple of like mergers. Well, the big one like with Faye and Rari. I believe that PiDAO bought BasketDAO in a smaller transaction, but those were not like tender offers. Like those were negotiated deals and that went to the community vote. So it's definitely a nascent area, and there are some protocols that are popping up to service the space. But yeah, to my knowledge, this may be the first like tender offer.
Gotcha. Yeah. Awesome. Thanks, guys. Really appreciate it.
Okay, great question. Thank you for coming on stage. First one today. Some questions again, like what about Ohm on Phantom? Can I stake it there? So again, GOhm is already a staked version of Ohm. To be included in votes, that's entirely dependent on, at least for now, snapshot. So it's not on our end to like we don't have that tech unfortunately available. So for right now, everything on ETH can vote. So it's like a consideration that you need to make. Either you pay the gas fees on ETH. They've been quite reasonable lately, but okay, again, I can understand that they're still quite high. Or you go to another network, but then you lose the power to vote, unfortunately, unless, again, the tech catches up to that. Let's see. When Cardano, when they have real smart contracts, let's see. Any ohm arm accumulating solid? Not that I'm aware of. Okay, so if anyone else wants to come on stage, please put your hands up. Always happy to answer basically anything that you would like. Even if Jala really lives in Mumbai, that question, like that rumor is going around, so I can either confirm nor deny that. Can you narrate paper 2? I'll try to do so. Oh, what did I say? Okay. Maybe let's touch upon some other topics, right? So we've seen now the market reacting. We can't really predict the future, of course. We don't know like if you even need inverse bonds. But for example, on the paper that Zeus released, that was interesting. I think a lot of people had a lot of questions about that. We also saw a paper on Twitter by an independent team as well on Olympus. How do you, especially as a policy team, and then also Chala, you've been an Ohm connoisseur since the start, look at these developments? Do you really like? At least I would think that we see more and more people consider Olympus as like maybe even a blue chip. Can I say that? And that there's like something very interesting behind this bonding and everything that can be done with it. And then, do you also think that people are taking us more serious now? For example, the APY has dropped, and we see that's more academic attention to Olympus. Is it a fair assessment? Anyone?
Are you asking me or?
Yeah, why not? Do
I've
it.
been talking too much. I'd like to hear. I don't want to put them on the spot, but I can go, I guess. So I have this like theory about like the way the market views us, in that like in the beginning, like there was a ton of market excitement and the market probably got overheated, and we had a deleveraging, and like it became like cool to pile on, or some of the Twitterati like pile on, and now I think it'll become cool again to be like contrarian, and like once people start to dig into the mechanism and realize that it's actually novel and very interesting, that like the smart people will begin to pick it up again as kind of a contrarian view. But I have been shocked by the uptick in like academic interest, right? So we had like Tarun and Ko's paper that was really interesting. The UC Berkeley paper, interest from professors like across the country. I think we had a team from Stanford like shadowing a team, and I heard today that like some, whether it's a professor at a booth or in Chicago, class. Same thing with Columbia University. So I find that to be pretty interesting that like these people are recognizing that it's like an interesting case study at the very least, and potentially like revolutionary model. So yeah, I don't know if that answered your question. Just kind of how I've seen the evolution.
No, I think
also
that's a fair assessment.
I think it's
But
much easier to analyze the protocol once all the noise is removed. Like there is no like discarding the whole what is a fair premium, right? Discussion. There's like no doubt that we had a ton of attention from like all sides of the crypto Twitter or whatever, and like sure that attention like did us well, like it increased our premium, we got a ton of revenue, but it also kind of abstracted the whole mechanics of ohm and focused on something else, like right throughout that whole, it was price run up, APY, and there was always something like different in the focus than chasing all those forks and stuff. Like none of that is like too rational, like how it developed. But I think now that the market has cooled off a bit and people are actually doing their due diligence, right? Because when you're in like the top of the bull market, it's really hard to do due diligence. because there are so many interesting projects, or not even interesting, but a lot of ways to make money. And yeah, so like you just prefer to ape and think later, whereas now people are actually seeking out those gems and like doing a deeper analysis. And I kind of like, I don't want to toot our own horn, but I kind of think that now we will get like a bit more sophisticated investors, especially when you're this close to backing. Obviously, uh, the downside is lower for them. So I would imagine that we would at this point get more sophisticated investors who are actually willing to do the due diligence, and I look forward to hopefully like working and talking with them, because like the paper and getting all that academic attention was like really useful to read, and like it definitely brought a new perspective, at least to me.
Mm-hmm. Yeah, I think that's indeed a fair assessment, and it's also a bit surprised me to see that so soon, especially also after maybe the negative attention that Olympus has gotten, if I may say so. It wasn't justified, but that's still that it triggered that intellectual curiosity of all these people. I think it's quite a testament to what we're building here. And yeah, so quite interesting to see that. And indeed, Suze is 12 and he wrote that. So please reevaluate your own life, people. Where were you when you were 12? I mean, okay, so a question that came in. I think we covered it already a bit. Maybe like a one sentence or a couple of sentences response, Shadow or Abby. But like someone asking, what is the actual plan for raising backing per ohm? We are running supply at least 880% a year before bonding. No way our treasury grows that much. What is this response to that?
Do you want to take it,
or
Abby?
Shadow?
Yeah, like I'm just leaving space for Abby because he's been silent.
Mm.
But if he can't talk, I can take it.
I think he's muted again. Like
Mhm.
he's unmuted, but he can't speak.
Okay,
Sorry,
yeah.
man.
So I think Jala answered that like a lot with what he said initially about Olympus 12 and all the projects within the DAO. Again, there is also the whole discussion about lower emissions, as well as the internal bond proposal that's been posted by, I mean, not proposal, but vision idea that's been posted by Zeus. As well as the liquidity management, like that will serve to kind of, stabilize this whole thing. Like there, like migrating an active management of liquidity is extremely complicated, and we've been working really hard on the whole infrastructure and making sure it's all secure, and like also learning a lot about that so that we can manage it in the best way, and that it doesn't require too much active management, but that we still get maximum benefit from the concentrated positions. So yeah, basically it's all of that together. Like when you say like how do you plan to increase backing at the end of the day, like nothing has been, there has not been less work done in the DAO. It is just that the markets are what they are, and like it will always come down to ultimately on the demand as well.
Mm. Yeah, I hope that answers your question. Yes, let's see. Any more questions? People want to come on stage? No one. Hey, come on. Why is everyone so shy all of a sudden? We used to have people sing on the stage, right? It's legendary. Maybe it's because Abby isn't here anymore. Rest in peace, Abby. People sing when they're happy. That's a fact. Why do you have to do me like that, man? Okay, maybe some in the meantime while I'm waiting for some questions. Last week I was in Denver. It was actually quite interesting to see. I spoke to I think 20 plus funds. Yeah, and then the sentiment there was that everyone had heard of Olympus, and like I think 95% of people found it super super interesting. But yeah, they're all just looking at it, and as Shadow said, they're basically now starting with their DD. Before they saw 200k APY, and they basically said, yeah, this will not work. But they all said like every other project would have not all, but like a lot of them said every other project would have been dead by now with like 250 mil in liquidations, and Olympus is just keeps on going, and even now the volatility that we see today, yesterday, like the past few days, that's relatively okay. In the grand scheme of things, if you see what backing we have, like one of them even said which other protocol out there, except maybe Fay or something, has this amount of capital to deploy. When will there be an own MasterCard partnership and a fiat on-ramp? I think you need to check out our friends over at Mover. Might be interesting. They are
Yeah, very
building
true.
that. Yeah, so very good partnership there.
Yeah,
Whereas Hades,
also exploring partnerships, like on ramps and trying to like figure out what makes the most sense. But yeah, definitely a focus of partnerships and so like especially with the Taiki team also. There's a lot to tie in there.
okay. Stevor, do you want to come back again? That's fine for me, but let's do it.
Thanks, guys. Just figured to ask. So, what would you guys say is the area of Olympus you guys are most excited to see grow in the next 3 months? Something specific, 3 to 6 months, and then what is something that Olympus, the community, needs the most right now?
Good question. I'll start this one. So what I expect that will happen in the next few months, maybe not this month, but definitely after, is that we will see institutions come in. Basically, we are behind the scenes also a bit working on that. What happens when you're this close to backing a Shadow already alluded to, is that the downsides will be much lower than any other, basically, project out there, unless you're a stablecoin. And it's again because more and more people are doing their DD, people will see that this actually has a lot of potential to also maybe hedge against the sort of volatility risks and so on. And we will really see, I think, in my opinion at least, these institutions onboarding with OHM, also maybe through some partnerships that we're trying to start into Olympus, and then we will see that as well. And that will be like a validating event where others will then also see this and come in, and there will be like these ARPs on like the bonds. At least that's what I hope to see. And I know Shadow has dreams about this as well, where basically the discount is ARPed to 0, right? And I think that is what will happen. It will be slow, but I really think that is what we'll see in the next few months.
Yeah, I'd like to just like good thing that you mentioned that. Like I'd just like to mention again the reason why the current bonds are at 2-day vesting is because the discounts were like very inefficient before on the longer vesting terms, where they were literally close to the discounts we had on the non-SOMG bonds, so the unstaked own bonds. And like I'm not sure people completely understand that like if your holding period is equal to or longer than the vesting period, you have no reason not to bond as long as the discount is above, 0%, barring the swap and gas fees. So like I don't think people completely understood the V2 bonds. Like you're getting staked home, and like as long as you can cover the swap fees and gas fees, you should continuously bond and not let the discounts take that up.
Okay. Anything else that you're excited about, Shadow, Jello?
I'm really excited about some of the liquidity stuff that I mentioned earlier. That's kind of been a part, some of my main area of focus. Allowing protocols to plug into the own liquidity rails via incur debt, and the V3 liquidity management stuff. I see as like really important for the future, and hopefully getting close to being implemented So in the very near future. So pumped about that.
Mm-hmm. Yeah, fair. Maybe also some little thing called Atlantis or something can also be interesting, but who knows? Who knows? Okay. Any other questions, Stewart? Or oh, I see we have another hand. So maybe I can thank you
That's it
for
for me.
your questions. Thank you very much, man. Memeplex, it's up to you. You're not online though, so I hope you're still here. Hello.
Hi guys, I have a bunch of questions. One of the ones I wanted
Perfect.
to start with, you answered in a previous community call, but I may not have been there, was just around the migration, like best practices. What did you guys learn from the migration process? Kind of from an outside observer, I felt like the continued emissions during the migration process and the paused bonding was a mistake. I'm wondering if you guys felt that way as well, or if there are any plans to address that in future migrations, contract migrations.
Oof, let me first say I really hope we never need to migrate again. So there's that. I think migration in all, I think there's the duration was just a bit too long. There's a lot of points. Like, at that point, we were like a multi-billion-dollar protocol, which was basically migrating all the contracts. That's going to be painful, whatever happens. But what we see now with our bonds v2, with like the possibility to do on-chain governance, with everything. Oh, am I robotic? Shit.
Yeah, you're robotic. Yeah.
Yeah.
I was having trouble hearing Wartol, but
Yeah,
maybe
yeah,
the
yeah.
rest. Oh, okay.
So I also didn't understand what he said,
I'm
but
back.
oh, go ahead.
Yeah, no. So what I'm saying is, it basically took too long. We know that, but like if you migrate a multi-billion-dollar protocol, it will always be painful, whatever happens. But you now have much better tech under the hood, ability for V2 bonds, on-chain governance, all the other things that basically people footed us about before. Those are gone. So we're actually in a much healthier state now after the migration. The process itself could have been better, but to be honest, now we're in a better place, even though the market cap is lower, of
Yeah,
course.
that part I agree with. I'm more commenting on like what are the learned observations for best practices for future contract migration. You're saying that you don't foresee contract migration being like a super near-term thing, but I would imagine, we all want to grow the protocol and we'd
But
be vested in a future where contract migration might be a reality. So I wanted the community to potentially, be discussing like what could be done better in the future, and probably won't have the exact same problems because clearly, we're under a new contract. So V3, whatever that may be, will have different sort of challenges.
So
Yeah.
to answer that, go ahead.
Go ahead. No, you go ahead.
So like to answer that from my perspective, there have been so just for the contract, this was the OM contract, so that's why it's an issue. Everything was connected to the OM contract, and honestly, hopefully we will never do it again with the OM contract, because that's really a specific case that we needed to address. We change the other contracts all the time. You just don't notice it because the migration isn't needed. Uh, as for like what we've done, there has been internally division into core team and the other working groups, which has greatly improved like how we work together and how we communicate across teams, because there are a lot of projects going on, and it's very important that like everybody is connected to everybody, that we always have, for example, somebody from marketing that can make sure that the community knows what's happening. I think the migration was very drawn out, and we should have made sure that everything was prepared 100% and then just push it out and make the whole migration window like short, so that we don't have it hanging over us the whole time, which we didn't do. We were also waiting on audits and stuff like that. So I think with this internal restructure, we will check all the boxes whenever we need to do something large like this. Like that, from my perspective, that was the main issue.
Yeah, and just not and just aside from the like the smart contract side, which also I think even in the last couple months, like you said, the organization, especially on like the smart contract side, and the size of the smart contract team has grown a lot. That can mitigate a lot of those issues. I think the other thing would be just like just a slightly better communication for the whole process. I think part of the issue is that it was a little bit longer than expected. But like to me, I think that stood out as a failure, like across the board. Was the like communication, the explanation of geom, what was going on with bonds, just with everything like that. I think could have been a better job, and so even if we don't do another migration, I think that those lessons will apply to really anything we do.
Okay, that makes sense. I think in reference to that, there's still some other topics, in terms of communication that I think the community still struggles with. One of those is backing, but I kind of wanted to ask another question first. Sorry, give me a moment to collect my thoughts. Okay, well, one of them was in relation to impermanent loss. Again, I'm not an expert in the mechanisms of OHM yet, but my understanding, and correct me if I'm wrong, is that OHM is subject to impermanent loss being protocol-owned liquidity when there is kind of a very negative price action against a pairing like ETH or something like that. So how does the Treasury currently manage that? How do they plan to manage that? Is there plans to arbitrage the pool in order to mitigate the impermanent loss? What would that look like if that is a plan?
So I think according to the latest calculations, I think impermanent loss has been offset by the LP fees that we take on that same liquidity, at least very handsomely so still, by at least a couple of millions.
Could you explain that more? I'm not particularly informed on that.
Yeah, so if you own your own liquidity, you basically generate also a bit of the fees that people pay to swap between OHM and, for example, ETH, DAI, Frax, whatever. So that basically can offset the impermanent loss that takes place when people ARP pools. So I think, again, I don't know, Shadow, you maybe know this better, but how many millions we made in LP fees over the past year. But it's quite significant, and at least by the latest calculation that I saw, we're still in the positive on that. Maybe Jala, if you know, maybe UniV3 also comes into play here. You're more the liquidity expert than me. If you're here.
I'm here. I just didn't know if Shadow wanted to say something first.
Okay.
Yeah, impermanent loss is actually an interesting topic for OHM, especially because, like you said, the POL, but also because there's no like external reference pools, right? So there's not necessarily that the protocol is losing to arbitrage to an external like centralized pool. There is some arbitrage between the pools themselves, which I think there probably is some small loss going on between those. But in terms of like the divergence loss, like part of it, right, of price changes, I think that's kind of like built into the mechanism of the protocol, is that the protocol is, with its own liquidity, is acting as like what we call like a benevolent whale, and is happy to take that divergence loss as price moves, meaning buying OHM on the way down, selling DAI as it were, or selling, and then selling OHM and buying DAI on the way up, right? So and there's no intention to ever pull that out, and so you can query whether like the protocol cares about the impermanent loss. It's really there to help the protocol and help stabilize price, and be there when sellers and buyers want to buy and sell. And in the same way, like the fees, right? Like, is it about the dollar amount of the fees, or is it about those fees continuing to like thicken liquidity on top of it?
Yeah, so I think those are good answers, but I was just kind of wondering if there's a deeper dive in order to mitigate that impermanent loss more and to make the revenue share on fees exceed the impermanent loss more drastically, and then also like what are the like black swan event risks to the protocol when we have large drawdowns and the protocol is backing OHM as the benevolent whale, because I think like as a sophisticated investor, ideally you as you're attracting institutional sophisticated investors, institutions are going to play institution games and whale games, and so if they're benevolent whales, fingers crossed, that works out well for long-term vision. But if you start to have less benevolent whales, then you have people who are extremely intelligent in maybe traditional financial markets and understand like there's opportunities with the amount of scale and external profit that they can take on a certain position in order to drive into like a very, very difficult position and create external profits for them, right? Externalization of risk. So I'm like, how is the protocol thinking about those risk events in terms of being the benevolent whale and mitigating those? And so that's where I was wondering if there are more plans on trying to reduce the effects of impermanent loss, or or like improve is buying with DAI or buying with reserves, and then not depleting their treasury reserves to buy the token.
Yeah, I don't want to put myself up as the liquidity expert. Like, we have a liquidity team that is looking at the stuff. I know that they are analyzing like some of the impacts, like the potential impacts from like moving to V3, some of like the novel like MEV and just-in-time liquidity attacks that would like steal some of the fees, and like just analyzing how to like whether that is an issue, whether it's not an issue, how to mitigate it, whether it's something we could do ourselves. Like you said, you suggested, like, is it possible that we could arbitrage to pool ourselves, right, and take that into the protocol rather than have it, like, I know Zeus likes to use the term heat loss, have that be a loss for the so there definitely are teams analyzing that. Interesting, I'm not sure, I'm trying to think up top of my head, like what kind of black swan event you're referring to, or what kind of attacks.
I don't have specifics on mind. I just have like cursory knowledge of these kinds of events happening in traditional markets, where they find like a particular company that has like certain financial triggers that are able to be manipulated. And I think in its like relatively nascent stage, in a relatively, 500 million is pretty big for a crypto protocol, but super tiny compared to institutional investors. So the triggers can be pulled very easily if those events are not accounted for.
Yeah, I mean, certainly, like, as we think about on-chain governance, that's the kind of thing that worries me. And I think like I mentioned earlier, one of the projects we're looking at is on-chain governance. Really important, to actually operate in a decentralized. I think we operate pretty decentralized today to the best extent possible, but to have everything truly governed on chain is really important. And then certain attack vectors appear there, right? We're doing this tender offer now, right? Where if everything was on chain, there's a lot more risk there, right? And so it becomes an attack vector to Ohm as well. And you have a lot of these like what I guess in TradFi you would call like shareholder activism, right, or other attacks that you could like see. So like if that were the case, I could see some attack vectors. I'm trying to. I don't know off the top of my head.
Well, one example is like one of the whales, and I'm not saying this is the best example, and I don't know all of the information about this incident, but one of the whales who owns like a pretty large amount of I think it was like LSK or whatever his handle was. He sold like I think 10 million or something like that into the liquidation cascades. Liquidated a bunch of people on 9/9. Maybe he was just protecting his position, but it also seemed like he may have done that intentionally with the timing, and he had a large.
Yeah, he didn't do that intentionally. I think he was just trying to protect like a dollar amount of a position. But that's
okay. Well, let me just leave that as a hypothetical, and then remove his name from that scenario. So, like, the hypothetical is this person had a large position. Maybe they were like genuinely interested in the long term, and then their incentives changed. So he had, and this person had a position in Butterfly, but in any hypothetical. So they had another position, another protocol, and that protocol is acquiring Ohm, and that's one of their many strategic initiatives. And so if they crash the price of Ohm, then that protocol can acquire Ohm at a much more favorable price to that protocol than they, like curve wars coming to Ohm, basically.
Yeah, I see that like as a potential. You also have people in any leverage market, right, who are kind of hunting liquidations, like kind of like the first part of there. If someone sell a bunch to the market, they're going to trigger liquidations. That's hard to stop in like a permissionless market without circuit breakers. Although like on the leverage part of it, the DAO is exploring like ways to mitigate like the sell pressure from like cascading liquidations and to like purchase bad debts itself. So like to I guess to mitigate the risk of that attack vector. In terms of like lowering the price because other protocols want to acquire. I see that as it's potentially an issue for sure. Although those protocols are still like then long term like incentivized to have the price of go up as they hold it in their treasury. So it might be cutting off their nose to spite their face. Kind of just spitballing here, like on the hypothetical.
Yeah, we both are. I understand that. Appreciate your answer. And in reference to, I don't know if you referred to this, but like protocol owned debt, has there been thoughts about how the pool structure would be for maybe separating 9.9 to reduce the socialized losses that Zeus mentioned as one of the incentives, reduce socialized losses? I don't have like a very sophisticated plan, but I was thinking maybe like there could be a high yield bond product, and then OHM participants who wanted higher yield but higher risk could participate in that pool, and that pool would be subject to the 9.9 debt, but not the rest of the pool. But I don't know if that's actually possible because like price action of the token, but potentially something there.
Yeah, there's something like either you could have like an incentivized pool like that as kind of, that could serve in the same way that a stability pool works for like liquidity, right? As an example, where they have an incentivized pool that absorbs the sales, or you could have a protocol owned pool like bonds that are specifically done into a stability pool that would buy the bad debts, right? So you allocate some like it's the same thing basically as a liquidity bond, right? Except the liquidity is specifically for bad debts instead of going into the LP pool, but it serves the same function as to like dampen the price impact.
Yeah, could you explain that in like a simpler way? So, how does the protocol take on the bad debt, and then how is that debt resolved?
So the protocol it wouldn't need to be resolved, or so like the way I can give the example of the way liquidity works is that people like are incentivized to put LUSD, which is their stable token, into a pool, and that pool is used to like basically do the liquidations, right? So it takes a liquidity as only as ETH as collateral. It basically like pays off the debt and takes the ETH in exchange, right? And then the holders then are free to sell the ETH if they want, or they can hold the ETH which they got at a discount, right? And they get the discount because there's some liquidation like incentive. If the protocol were to do that itself, right, it could raise funds specifically for the purpose of paying off debts and then taking the OHM at a discount, right? So it could buy the OHM profitably, but it could just hold the OHM and not sell it into the market because those funds were raised specifically to buy that OHM back and mitigate the like risk of like cascading liquidations, right? But it's not necessarily then trying to flip a profit on the OHM. But it was able to buy OHM at a discount to the market and at the same time like dampen the price impact from like potential liquidations. So you could sell bonds that would fund that pool specifically.
Okay, that was a great answer. I appreciate that. I have more questions if it's fine.
I'm happy to keep going. War till I don't know.
Okay, cool. One of the questions was on just like how you guys are thinking about market value premium. Right now, the market's crashed. The premium is probably pretty close to 1x, and maybe we were at like 4x or something a few months ago. But obviously, when the bull market actually returns, like the rising tide lifts all boats. But how can the protocol actually proactively create metrics around communicating and quantifying and also like solidifying market premium over the treasury value?
It's an interesting question about. I'm not sure the It's hard to like for the protocol to show necessarily why like a monetary premium should exist. Like to me, it happens naturally as demand increases for the asset. So I mentioned earlier, like my mental model for it is that you have this like floor value, which is backing, and then you have this like extra value from the fact that this is a going concern with revenues and profits. And on top of that, you have extrinsic demand for the asset, which creates this monetary premium, right? So that is like, and that extrinsic demand is like increased as people are willing to hold the asset because it's relatively stable or because it allows them to plug into these liquidity rails, or other protocols try to push the governance aspect, right, where like holding this gives you rights to direct emissions, right, or direct bond capacity in this case. So all those things begin to layer together to create like extra demand. Like I said, I'm really excited about like the liquidity aspect of that and demand, and like as utility for other DAOs and institutions to hold. And naturally, that like helps increase the monetary premium. As you have an increased monetary premium, you can take in more bonds, right, as the price goes up, right, and then the floor starts to move up, and that premium expands as the floor is moving up, and you have this like flywheel start again. So in some ways, like I see this as kind of anti-fragile, but I'm not sure that it's such an easy thing to quantify. Zeus probably has much better views on like what a long-term steady state premium and like fractional reserve ratio would be. But you know, it's hard for me to say.
I think that's a good example, but like taking the counter example where you have sophisticated investors coming from a particular mindset in traditional markets, and they're going to apply analogous thinking, so using analogies in order to create valuations for crypto, because crypto doesn't have strong fundamental valuations, as you just mentioned. You know, people are using, oh, this is governance or this is blah blah in order to justify the worth of the token. I think like one of the critiques so far has been like, oh well, Ohm is just like some sort of decentralized hedge fund or some kind of fund basically, and so then like what funds actually have a meaningful premium over their assets. So that's where like just on the communication example, and maybe not the actual functional example yet, but I think there's maybe potential for functional. I don't have any proposals yet. How would you communicate that like that is not the case, that the protocol value is worth more than just the value of its assets plus some so far relatively minor percentage of revenue generated from that treasury?
I strongly disagree with that sentiment that there's a relatively minor revenue from the treasury. Projected revenue still today is close to, I think what I calculated earlier was like 60, 78 million, which on our assets is not like a traditional just asset holding entity. We are also not a fund. I want to also clarify that. We will never be that. That's not our aspirations. Our aspiration is to be a currency and not a fund. So people that expect us to do crazy things for a treasury and to yield generations with, for example, depositing DAI in Fuse or things like that, that's not our ambition at all. And we will always be a currency, and our main income will be through these bonds. I want to make that very, very clear here.
Well, yes, but the reason that was stated was that you're going to have, if you're attracting larger institutional investors, they're coming. I mean, obviously there's crypto native investors with large stacks of money now, but like if you're attracting outside of the crypto space, they're going to come with preconceived notions about analogous examples and how to value a company. So I'm saying you can say that to me, and I may believe that. You can say that to the community, and they may believe that pretty quickly. But like, how do we communicate that to people who are not going to immediately take that at face value?
But you're
just by
investing.
not,
You're
yeah,
investing in growth. You're not investing in just like what's currently in the treasury. Like
exactly.
that's what will drive the premium. Like what's up with all the price turning stocks, right? All the high price turning stock. You could argue the same. Like with Ohm, you're investing in the DAO basically, that it will continue to grow and deliver products like it has been, and it's been only a year. And look at what's been delivered. Like I would actually argue that like those investors coming from the outside may actually understand it better than the investors in crypto, like what Ohm is supposed to be about. And to your previous point, because Jala like had a 3-minute talk without a single breath, uh, you you asked about how we would communicate something, metrics or something. There is actually a very complex metric being worked on within the DAO that is like supposed to be like a huge overview of the overall protocol health that will incorporate, I don't know, like 5 to 10 categories, and each will have a score, and you can track that over time. So I don't actually know the ETA on that, but like it's a really large project. So that will be awesome to view like the overall protocol health through easily understandable metrics.
Mhm. And on that, maybe like we're 8 minutes over time. If you have
Mhm.
maybe any further questions, please let's continue in the community call chat. But we like to keep these an hour long, also for the recordings afterwards. Very good questions though. So I would like to
Yeah.
thank you for coming on
Thanks
stage.
for chatting with me. I hope to talk to you guys again sometime. Bye.
Come earlier next time. Yeah.
Yeah,
Thanks for the
exactly.
questions.
Okay.
I asked the entire hour to come on stage. So.
Yeah. Yeah.
Good. Thank you very much, everyone, for joining. I hope it was a good session for you all as well. The recording will be online soon. If you have any questions, please hang out in the community call AMA chat after this, and see you all next week.
Thank you, everybody.
Bye.